Hello traders, in this module we'll be covering sticking to the process. I really want to emphasize the importance of sticking to the process and not analyzing or thinking or getting off track thinking that certain instruments aren't going to give you opportunities and only focusing on trying to find setups. And the whole key of this module is to understand that at any time, any week, if you stick to the simple rinse and repeat process, that you are going to find these opportunities. Now, as I've mentioned to my sons, having a basket of 10 to 15 instruments, we can have 5, 6, or 10 currency pairs as your skill set and your confidence grows, increasing that with indexes, gold, metals, energies. But when you're looking for one thing once a week, it's very easy to go through a basket and be patient. It only takes less than a minute to look to see if the setup is there or not. And so the importance of sticking to the process is what will allow you to maximize the results. And I want you to think, really importantly, understand what ACB means. We're looking for setups that aren't coming back, the ones that you can't lose on. Simple rinse and repeat, the same setup on any instrument over and over again. Now for me and my sons, they're looking at the New York session. Now there's going to be opportunities. We're going to talk, the most important thing is the watch list. You're going to build your watch list, and you may only have a couple of pairs that come up on your watch list for Thursday, for the Thursday trade setup. Rinse and repeat, scale it up in size. Now if I have some instruments on my watch list and it's moved in Asia or it's moved in London, I'm not chasing the trade. But what I want to emphasize to traders in this module is that you will have opportunities in your sessions. Now currency, one of the comments a trader made is he didn't recognize the opportunities, didn't seem to come as frequently on currencies. And I'll emphasize again to go back and walk yourself through the higher time frame, which I'm going to be doing in depth, just to emphasize that the cycles repeat, and whether or not you're going to get that opportunity on a Thursday, hard to say, unpredictable. But the important part is training your brain to stick to the process. Wednesday, 4:59 p.m. What instruments have closed in breakout? New York closing charts. What instruments have closed in breakout at the highest or lowest close of the week or month? Now heading into our new day, our new session, whether you're trading Asia, London, or New York, is there any major red news scheduled in that session? Now I've talked about non-farm payrolls, FOMC, CPI, obviously not stepping in front of any of those high impact news releases. There are going to be other individual currency high impact news events, rate releases. We're going to see other US dollar major red news. I've talked about looking at cross rate pairs. We're going to go through one instrument today just in a shorter video. There'll be longer video to follow on the higher time frames, looking at currencies, looking at cryptos, looking at indexes, but most importantly just focusing on the process, and then understanding when we're at the extremes of a week, how that 4-hour rollover time can often allow us to get into a coil, regardless of New York index opening at 9:30 or anything else. When that timing window presents in your session and we have our coil, positioning ourselves in the market, putting a stop in place when a level is broken, going to break even and walking away. Keeping it very, very simple, rinse and repeat, training your brain to stick to the process. Our entry is inside of our 5-minute EMA coil. We can enter in on a 15-minute EMA coil. It's irrelevant as long as you stick to the process, you put your stop in place, and you walk away. Now, emphasizing, going back to our EMAs, what does that represent? That is the higher time frames coiling and preparing for an explosive move. That represents the higher time frames rolling over and preparing for an explosive move. We place our stop above or below the extreme depending on which direction we're trading. We have our maximum stop loss. if you're just going to position yourself based on the higher time frame, a maximum stop loss, whether it's a 4-hour pin hammer or a 1-hour pin hammer, the maximum stop loss at that extreme, if that is your choice on this trade setup. Because remember, it's an ACB. We're taking a position, we're putting our stop in place, we're managing our risk, and we're walking away. Hold till close or a preset take profit level. Now, as your experience grows, obviously we've talked about the scalability of this particular trade setup. The trade setup that shows up on a Thursday that is designed to go to the close of the day. This is not the same as taking a trade. So the importance of understanding what ACB templates are all about is that they are going to the close of the day. Move to break even and walk away. Now here's the most important part, and this is what happens. Traders start trying to optimize and find trades everywhere, and they deviate from the plan, and they start thinking. And I'm going to emphasize to just do your job. As I've told my sons, don't think, just do your job. Wednesday, 4:59 p.m., what instruments have closed at the highest closing price of the week or the month, or the lowest in breakout? Which pairs are on your watch list? Now, Richard Dennis's quote, I always say you could publish rules in a newspaper and no one would follow them. The key is consistency and discipline. My son's jobs on a Wednesday night is to find all pairs that have closed in breakout, and are they at the high of the week, low of week, high of month, low of month? Which pairs are on your watch list heading into Thursday in the session that you're trading? Your job is not to think. The goal of a successful trader is to make the best trades. Money is secondary. And that's what this video is about, is sticking to the process. The process helps you identify the pairs that are potentially now setting up into an ACB trade opportunity. And that's the whole point, the ACB trade setups, because we want to target trade setups where we have a high probability edge. And that's where over time, as your skill set grows and you identify these opportunities, the scalability of them, the rinse and repeat scalability, where you can make a lot of money in a very short period of time, which is why if you grasp that concept, you won't be interested in throwing away capital on suboptimal trades. Richard Dennis. So the more you deviate and start looking for other trades or optimizing or just sticking with one or two instruments because you don't think that other instruments will give you this opportunity, that's when you'll kick yourself, because lo and behold, these opportunities will show up and present, and you'll have missed that just by not sticking to the process. 4:59 New York time, Wednesday's close. What instruments have closed in breakout on Wednesday at the high or low close of the week or month? Put them on your watch list. And then how does it set up into the session that you're trading? Is there any major red news scheduled? Meaning, let the news be released. We've talked about avoiding the high impact days. But if there is major red news released, we can have some short-term volatility, 5, 10, 15 minutes, and then an opportunity in our coil, to position ourselves, place our stop in place, and walk away. Hold till close, or a measured profit target level to take you out of that trade. Zero thinking, zero emotion, zero management, because they're going to the close of the day, and zero stress. And then managing yourself to ensure that you don't do any other self-sabotaging behaviors, either to the winning trade or in between finding these templates. Simplicity, same process, same setup, same approach, over and over and over again. And that's what will allow you to develop the consistency over time, keeping it simple, rinsing and repeating the ACB trade opportunities. Now, just in the shorter video, I'm going to walk through this pair and go through some specific examples of where the same setup shows up. We're sticking with Wednesday's close and breakout. This is a currency pair, Euro Canadian, a cross rate pair, and we have a market that's closed in breakout at the highest closing price of the month and week in this particular case, heading into our Thursday session. And I just want to point out that we're going to go through a basket of all different types of scenarios, but for the purposes of this video, I just want to demonstrate that just this one currency pair alone, offering 3 or 4 opportunities in the year, are scalable trade setups. So if you're finding 1 or 2 a month that are ACBs, that are scalable in size, that can significantly compound your account. Same setups, Tuesday closing and breakout, Wednesday closing and breakout. But we have an opportunity for London session traders where this market has coiled into the London Open, and this is our higher time frame, our 1-hour chart, at the highest closing price of the month, for an explosive collapse back to the low of the week level. And it's very simple. This is a 15-minute chart. And the reason I put this on here is that sometimes on the currency pairs, or if traders are finding the 5-minute just a little bit hard to understand, and remember, very simple. Once we get our coil, it's taking a position, placing our stop, moving that position to break, even if we break a daily level or an intraday level that's giving us a high or low swing, and then walking away. There's nothing to manage here. Taking the position, we have our thesis, we have our coil, the market breaks down and continues into the close of the day, exiting with 125 pips of zero stress, zero emotion, zero thinking. Now, if traders were, you're getting caught up in chasing other trades and looking for things, and just sticking to the process allowed you to bring a pair up onto your watch list, it may not have set up into the London window. But I want to demonstrate this, that opportunities are going to show up in all sessions on different pairs. Stick to the process of putting the instruments on your list that close and breakout Wednesday 4:59 p.m. New York time at the high or low closing price of the month or the week. Now this is again the same pair. They're going to be going through the same pair, and this is only a couple of months later, a few months later. Last trade was in August. This is January, and a different variation of where the market's inside, but it puts a low of month in place and closes in breakout Wednesday 4:59 p.m. at the high close of the month in breakout and the high close of the week, heading into our Thursday session. Now this particular opportunity set up into our New York window. Again, just sticking to the process allowed this pair to come up on your watch list, coiling sideways into our New York Open inside of our EMAs. We had major red news on this particular day, the euro refinancing rate. But after the news was released in our press conference, we can take a position in the coil, place our stop, and walk away. Once that level swings and breaks, we can go to break even. There's nothing to manage. There's nothing to do other than let the trade play out. But again, just a market that's closed in breakout at the high close of the month on Wednesday in our watch list. A few months later, again in June, we have a market that goes down Monday, Tuesday, Wednesday, puts a low of month in place, explodes on a news catalyst, and closes in breakout at the high closing price of the week. You'll notice to the left, we have a market that had been breaking down, but the market pumps up on major red news and closes in breakout, proceeds to auction higher to the high of day level before breaking down in London and coiling sideways. An example of our 4-hour rotation starting at the extreme in the London window, heading into the New York session. Market coiling sideways, but the beautiful part about this opportunity is that we had major red news at 8:30 New York time. 8:30 New York time, the news is released. This is an example of wicks on both sides inside of a range and pumping back up into our New York Open and coiling sideways for the parabolic collapse into the close of the day. Again, simple process. Market, an instrument that came up on our watch list, high closing price of the week in breakout. How did it set up into our session, allowing major red news to be released and then going back to our original thesis? So some of these opportunities are not going to be the same as gold or indexes in terms of the range, but it's an ACB trade setup. It's not coming back. which means when we get that coil and we have this template and we can scale into it, it's an opportunity to make money on these trade setups. This is an example in the long direction where we had a market that's gone up in a new month, put in a high of month level, new week starts, Monday, Tuesday, Wednesday, closing in breakout at the low closing price of the week, heading into our Thursday trading session. It's closed in breakout, coiling sideways into our New York window. We had major red news again at 8:30, which after that market has released the news, we go back to our simple process. We've already got a market that's coiled, but we have major red news. Major red news is released. We can take a position after the news is released, putting our stop in at the extreme. We're inside of our coil, and even if traders want to place that stop further away, again, depending on their position sizing on this particular instrument, it's a cross rate pair, putting our stop in place, walking away, and holding till close, or taking a fixed profit target at the extreme in terms of high a day or low a day levels. But a very simple process. What instruments have closed in breakout on Wednesday, 4:59 p.m. New York time? Put them on our watch list. How does it set up into the session that we're trading? Do we have any major red news on the schedule, allowing that news to be released, and then going back to our responsibility of executing the trade, managing our risk, and holding till close, taking profits and walking away. Just coming back to what we spoke about in the first part, it's important to not start thinking. It's important to stick to your job. Stick to your job. Build your watch list each Wednesday. Go back to the screen, which pairs have set up into the session that you're trading, and stick to the process. Now in the next video, we'll be walking through the higher time frames and just, again, the process of identification, sticking to the plan, and finding the instruments that set up into our ACB templates. See you in the next video.